Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. The break above the third of three resistances, that's the neckline of the February to April 2023 head and shoulders continuation pattern, currently at 84.82 back at the start of March, was the beginning of this recent move higher. This neckline had previously helped cap the market in various times, most recently in late January and late February. Over 9 weeks ago, this resistance was breached and broken. So from where in price does the recent move higher originate from? Well, it starts at the base of the congestion between 83.46 to 84.40, containing the September 2012 high at 84.24, February 2013 high at 83.50, as well as back then the long moving average, currently at 85.50, and the medium moving average, currently 88.22. However, the initial journey higher had been a tortuous one. Yet in late February, the market built on the congestion below 84.40 plus the short medium moving average back then, which is currently at 91.41. And finally, a golden cross just over 9 weeks ago, the medium moving average over the long moving average, and staged an eventual move up over this neckline. So what now? Well, there are two parts to the answer. Back 8 weeks ago, I said the following, and I quote, "The action of the last 3 weeks," so that is now 8 weeks now, the last 3 weeks may have left us with a question, is this action a bullish halfway hesitation or is it a potential double top? End of quote. Well, this pattern became a bullish halfway hesitation, and both the primary and the harder to reach secondary target were achieved. Since then, we've had prices travel higher, and last week reached the February 2011 high, indeed the whole of 2011 high at 10,190. The second part has been the treatment of the action over the whole of March, in that we have a beautiful, if very acute, March-based bullish Andrews pitchfork highlighted in dark blue on my daily chart. The market is at the moment close to the middle tie, currently at 10.087, with the upper tie and above currently at 10.419, acting as resistance, and the lower tie and below currently 97.55, acting as support. Together, these all have been and still are showing the excellent bullish angle of attack of this market, and will do so until they fail. LME 3-month aluminium. Things have become a lot clearer recently. I'll start with my commentary from 13 weeks ago, when I said the following, I quote, "Over this last week," so that is 14 weeks ago, "over this last week another pattern started to develop in my mind, and I've drawn it unhighlighted on my daily chart. So late October 2023 to date, possible potential diamond pattern. It's not a pretty pattern, but I pay close attention to converging trend lines for this pattern. I am not in love with this pattern and will retire if it does not perform. But it does have merit and is one to watch." End of quote. 10 weeks ago, I chose to highlight this pattern in dark blue on my daily chart. It is still highlighted the same as it was then. I grant you, still is not the best looking diamond pattern, but as I said earlier, it did and still does have merit, especially on this break higher. Now, 7 weeks ago, I laid out some potentials topside for such a pattern. Boy, did this market take its own sweet time in moving up to these targets, but get up there they did. I also pointed out two features 7 weeks ago, and I quote, "The first might end up becoming a big thing in the future. We have a bow tie formation late 2 weeks ago, which is now 8 weeks ago, late 2 weeks ago, of the rising short moving average, currently at 25.68, slowly rising short medium moving average, currently 23.81, and a barely rising medium moving average, that's currently 23.19. For any who follow bow tie formations, you can easily see that these moving averages are in the wrong order. However, that being said, the theory indicates that the market will move in the general direction of the outgoing moving averages from the bow tie, which, to be honest, originally looked sideways, but now is becoming clearer as a move higher. Additionally, between 15 to 20 sessions after crossover, we may see a significant move from this bow tie. In this case, and allowing for some holidays in between, the market may make a move between the 9th and the 16th of April. I will not await with bated breath, as I'm not happy about this bow tie formation at all. Finally, we had a golden cross last week of the short medium moving average up over the medium moving average. It's maybe a lagging indicator, but it's still there just after the bow tie formation, and it adds some comfort to the overall idea. End of quote. Well, you can easily see that between the 12th and the 15th of April, we had a big gap higher. And the 15th itself was a huge range, something in the order of 7.5% of the value in one day, despite ending up as an indecisive doji cross. Okay, all that is fine, but what now? Well, I suggest the 15th showed the extent of the recent market on the top side, and we have seen a peaking action over the last 3 weeks. It's not as clear as seen in LME copper, but it has elements of a potential top. If this is to happen, then we need to see the gap in mid-April between 25.12 and 25.35. We need to see this filled, and relatively soon. If after this the market continues lower, then recent action will have been a peak. If not, then this may become a staging point, even a possible halfway hesitation for a move higher. The only issue will be if the market takes off higher in the next week or so, in which case we'll have to balance the potential, well, the bullish potential of a possible halfway hesitation with the bearishness invoked by the descending highs we saw in April. LME 3-month lead. In mid-February, it had congestion around the 2000 figure. This support was not a spectacular congestion, but enough to hold prices in a pipe bottom. After this, the market rose up into a small but very steep ascending wedge pattern before breaking lower again at the end of February, only to be held at the same support seen back at the start of this year, the January 2020 high at 2039, and leading to a fresh rally. This rally saw the market break higher, over the 50% Fibonacci line of the March 2020 to March 22 move at 21.35 and the 50% Fibonacci line of the May to November 2023 move at 21.42, and even the November 2023 to February 2024 move at 21.51. However, as I said 8 weeks ago, and I quote, I suspect the key overhead resistance will be the same as in late January, congestion between 21.82 to 21.89, end of quote. Now please remember this quote as it will become relevant again. Prices made a peak in the middle of March with a high that was importantly lower, and I cannot stress this highly enough, a high that was lower than the one in late January. Prices then dropped down below all the moving averages, below the January 2020 high at 2039 and almost down to the February low at 1994. Enough to say that prices eventually effectively reached it, let's say. 6 weeks ago, I put forward a question, and I quote, all this action is making the big picture very clouded. All I have now is a consideration that perhaps, just perhaps, the action since November last year is a really big cat's ears pattern. It's not too early to know, it's too early to know just yet, but I would like to lodge that thought in your minds just in case, end of quote. 5 weeks ago, we were close enough to the lows for me to still consider that. But then we had a dramatic counter-to-counter daily key reversal up that halted that day at the short-term medium moving average, currently 21.21. What is more, prices after this moved higher, utilising the short medium moving average as a base. All this bullish action kicked out the idea of a big cat's ears pattern and instead brought forward the idea of a late January, mid-April double bottom pattern type. It is here that I bring back in the earlier quote made 8 weeks ago, and I quote, I suspect the key overhead resistance will be the same as in late January, congestion between 21.82 to 21.89, end of quote. It has been this overhead congestion that capped the market throughout the beginning and middle of April, bar one aberration, until 2 weeks ago. We are now over this area of resistance, so it's appropriate to consider the upside potentials for this big double bottom pattern that has occupied a third of 2024. Thus, a primary target X would be in the 22.96 area, whilst a secondary, much harder to reach target X1 would be in the 23.42 area, which is up off the top of my chart. Okay, all that being said, let's look at some other features that have emerged. First off, we are spearing through the recent action in purple, the lower trendline extension of the May to June 2021 descending triangle, currently at 22.07. This had been acting as a resistance upon the current market, but may be turning now into a support. Next is the handle. Handle is a feature of the double bottoms, or double bottoms generally, especially Adam and Adam types, such as the one we have. It is the band of hesitation seen around the middle of April between roughly the overhead congestion between 2182, 2189 and the twin 50% Fibonacci lines below at 2151 and 2142. This is an intrinsic part of the double bottom, but it can also be seen as a bullish, potentially, halfway hesitation. Thus, if we look at it that way, and depending where we measure it from, we had a first target in a 2240 area that has already been achieved, and a second much harder to reach target, possibly in the 2325 area. The actions are not good enough for a target as yet, but well worth remembering and keeping an eye upon. Finally, the elephant in the room, the bright red highlighted mid-February to late March bullish Andrews pitchfork. This looks very good right now, with the market in between the middle time below, that's currently at 2188, and the upper time above, currently at 2295. The middle time has indeed been pretty good as a dynamic rising support since early April, and we are seeing the results of that today with a high not seen since November last year. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.